Hey everyone, welcome back to the channel. Today, we are diving into a topic that affects almost every adult, credit cards. So many of us have one, two, or even a wallet full of them. But are we really using them to our advantage? It is easy to look at a credit card and see it as a magic piece of plastic that lets you buy whatever you want, right now. A ticket to instant gratification. But that thinking is a trap, and today we are going to dismantle it. The most important thing to understand is this: a credit card is not free money. It's a financial tool. And just like any powerful tool, if you use it correctly, it can build amazing things for you. But if you misuse it, it can cause some serious damage. So, stick with me for the next few minutes, and we'll explore how to master this tool, unlock its benefits, and avoid the pitfalls on your journey to financial freedom. Let's start with the good stuff. Why should you even bother with credit cards if they can be risky? Well, the benefits are significant when you use them responsibly. First and foremost, building your credit history. Your credit score is one of the most important numbers in your financial life. It affects your ability to get a loan for a car, a mortgage for a house, and even the interest rates you'll pay on those loans. Using a credit card and paying it off consistently is one of the best and fastest ways to show lenders you're a reliable borrower. A good credit score can literally save you thousands, even tens of thousands of dollars over your lifetime in lower interest payments. Think of it as your financial report card, and using a credit card wisely is like acing every test. Next up, let's talk about rewards. This is where using a credit card can feel like a life hack. Many credit cards offer rewards programs like cashback, travel points, or airline miles. Imagine getting 1 to 5% back on every dollar you spend. If you're spending money on groceries, gas, and bills anyway, why not get a little something back for it? Let us say you spend $2,000 a month on your card for regular expenses, and it offers an average of 2% cashback. That's $40 back in your pocket every single month, or $480 a year, just for using the right payment method. Over time, these rewards can add up to a free flight, a hotel stay, or simply extra cash to boost your savings. You're leaving money on the table by not taking advantage of these programs, as long as you're paying your bill in full. And there's another huge benefit that often gets overlooked: consumer protection. When you use a credit card, you're better protected against fraud and faulty products. If someone steals your debit card information and drains your bank account, that's your actual money gone. Getting it back can be a long and stressful process. But if your credit card number is stolen and used for fraudulent purchases, you can simply report it to the credit card company. Under federal law, your liability for unauthorized charges is capped at $50, and most major issuers have zero liability policies, meaning you won't pay a dime. Furthermore, credit cards offer something called chargebacks. If you buy a product that turns out to be defective or the service you paid for wasn't delivered, and the merchant refuses to give you a refund, you can dispute the charge with your credit card company. They will investigate on your behalf and can reverse the transaction. This gives you a powerful layer of security that you just don't get with cash or debit cards. It's like having a financial bodyguard. Now, we can't talk about the good without addressing the bad and the ugly. The risks of misusing credit cards are very real and can have devastating consequences. The number one danger is high interest rates. Credit cards are a form of unsecured loan, which means there's no collateral like a house or car. To compensate for this risk, banks charge very high interest rates, often called the annual percentage rate or APRL. We are talking rates that can be anywhere from 15 to 30% or even higher. If you don't pay your balance in full each month, that interest starts to pile up and it compounds. This means you're paying interest on your interest. It's a vicious cycle that can quickly turn a small purchase into a massive, long-term debt. A $1,000 TV can end up costing you $1,500 or more if you only make minimum payments. This brings us to the next major risk: the slippery slope of debt accumulation. Because credit cards make spending so easy and painless in the moment, it's incredibly easy to overspend. A little purchase here, a dinner out there, that new gadget you've been eyeing, it all adds up. Before you know it, you've racked up a balance that you can't afford to pay off at the end of the month. You start making only minimum payments, and as we just discussed, the high interest rates kick in and your debt starts to grow exponentially. This is the debt trap that so many people fall into. It can cause immense stress, limit your future opportunities, and make you feel like you're constantly working just to pay off past purchases. Financial freedom becomes a distant dream when you're chained to high interest debt. It's a heavy weight that can impact your mental health and overall well-being. And finally, misusing credit cards can wreck the very thing we said they can help build: your credit score. The biggest factor in determining your credit score, making up about 35% of it, is your payment history. Just one late payment can cause your score to drop significantly. If you miss payments repeatedly, your score will plummet. A low credit score makes it harder and more expensive to borrow money in the future. Lenders will see you as a high-risk customer and may deny your applications for loans or offer you terrible interest rates. Another factor is your credit utilization ratio, which is the amount of credit you're using compared to your total credit limit. If you max out your cards, your utilization will be high, which signals to lenders that you might be overextended and reliant on debt. This also hurts your score. So, the same tool that can build your financial reputation can just as easily tear it down if handled carelessly. So how do we enjoy the benefits while avoiding these terrifying risks? It all comes down to discipline and adopting a few simple best practices. First, create and stick to a budget. This is non-negotiable. You need to know exactly how much money is coming in and where it's going. Your credit card spending should fit within that budget. Don't let your credit limit dictate your spending limit. Your income dictates your spending limit. Treat your credit card like a debit card. Only charge what you know you can afford to pay off with the money you already have in your bank account. The moment you start thinking, "I'll pay for it later," you're heading into dangerous territory. The second, and arguably most important, rule is to pay your balance in full and on time every single month. No exceptions. This is the golden rule of credit cards. When you pay your balance in full, you pay zero interest. Zero. You get all the benefits, the rewards, the credit building, the protection, without any of the costs. It's that simple. Set up automatic payments from your bank account to ensure you never miss a due date. At the very least, set calendar reminders. A perfect payment history is the foundation of a great credit score and financial health. If you can't pay the balance in full, you need to stop using the card and reassess your spending immediately. Making only the minimum payment is the fastest way to get buried in debt. Third, monitor your statements regularly. Don't just wait for the bill to arrive at the end of the month. Log into your online account once or twice a week. This helps you do two things. First, you can track your spending in real time and make sure you're staying within your budget. It's a lot easier to curb your spending when you see the balance creeping up. Second, it allows you to spot any fraudulent charges immediately. The sooner you catch and report fraud, the easier it is to resolve. Reviewing your statement line by line also helps you identify any recurring subscriptions or charges you may have forgotten about, giving you an opportunity to cut unnecessary expenses. It's about being an active and engaged manager of your own finances. To wrap it all up, a credit card is neither your best friend nor your worst enemy. It is a powerful tool. In the hands of a disciplined, informed user, it can build a strong credit history, provide valuable rewards, and offer unmatched security. It can be a stepping stone towards achieving your major financial goals, like buying a home. But in the hands of someone who sees it as an endless source of cash, it can create a mountain of high-interest debt that can take years, or even decades, to climb out of. The choice is yours. By setting a budget, treating your credit limit with respect, paying your balance in full every month, and monitoring your activity, you put yourself in the driver's seat. You become the master of the tool, not the other way around. True financial freedom isn't about having unlimited money to spend. It's about having control over your money and making it work for you. Using credit cards wisely is a critical step on that path. Thank you so much for watching. I hope this breakdown helps you feel more confident about using your credit cards. If you found this video helpful, please give it a thumbs up and don't forget to subscribe for more content on personal finance. Let me know in the comments what your favorite credit card strategy is. See you in the next video.